All right, silence that phone. All right, let me share my screen. Let me share here. And then see if we can. There we go. There we go. All right. Hello and welcome, folks, to Wise Guys and Ties. This is our Think Outside the Bank segment. All right. And now I've got my computer trying to mess me up. But that's okay. I love technology, especially when it works.
Absolutely.
Nice to know that the audio is working. Okay, so here we are. This is our segment where we think outside the bank and we go over all different kinds of ways for you to build business credit, for you to get access to direct funding that people don't normally think about. But we've been focused for the last couple of weeks on a lot of coronavirus funding that's been available. The EIDL, we've been talking about that. We've been talking about the PPP. And so we're going to talk more about that today, as well as some other funding that is available to you. So we got a lot to discuss, so let's just jump right into this update. Okay, here we go. Just so you know, who are we? I'm Joseph Smith. This is my partner, Ray Fleming. We're the Wise Guys and Ties. Wise in the ways of helping you build business credit, wise in the ways of helping you start a business and make it fundable and lendable so that you can have the tools that you need to thrive and succeed regardless of what's going on in the economy. So this is our contact information on your screen. Feel free if you want to reach out to us for a free 30-minute consult. We'd love to discuss your situation and see how we can help you reach your goals. All right, so moving right along. Let's give you an update. Where are we at? The Paycheck Protection Plan. Who can apply? Well, if you've been in business before February 15th, 2020, and you've paid employees, that have been on staff, payroll, or 1099 contractors, that's who can apply. Businesses affected by the coronavirus with less than 500 employees per location. So sometimes you have big companies. We like to think about like restaurants. They have multiple locations. Yeah. So overall, the whole chain or franchise might have well over 500 employees, but it only counts per location. If you have under 500 employees, then you qualify. The Paycheck Protection Plan, this is an SBA program, but it does include sole proprietorships, independent contractors, and self-employees. They must file separately, but to have an SBA program that is open to sole proprietorships and independent contractors, that's a first, as far as I'm aware.
Yeah, and that app, those folks can start applying tomorrow.
Yes.
April 10th.
Yes, exactly. That's actually on a future slide.
Oh.
So also included is private and nonprofit organizations, your 503Cs, right? Veterans organizations, all of them can use the Paycheck Protection Plan. So what are the terms? Well, you can have 2.5 times the average total of your monthly payroll for the last 12 months. So there was some discrepancy. Some people thought, well, is it just for 2019? Actually, it's going to be based off of the actual last 12 months. So if the loan gets issued in May, they're going to go from May of 2020 all the way back to May of 2019 and take that last 12 months. And then this also, we're going to talk a little bit more about this, but the Paycheck Protection Plan includes, if you've already applied for the EIDL, right, the Emergency Injury Disaster Loan through the SBA, they're just going to roll this together. No, your loan payments can be deferred for 6 months. No collateral is required. When does the SBA say no collateral is required?
That's unheard of.
They're going to ask still, and there's still a question on the application for collateral, but if you don't have it, they're going to waive that requirement. No personal guarantee required. That's another thing that's amazing because the SBA always wants you on the hook. Mm-hmm. No prepayment penalty if you pay it off early. And then neither the government nor lenders will charge small business any fees. And this is huge because the SBA sometimes works anywhere from 3 to 7% of the amount that you're borrowing into upfront fees. This is backed 100% by the SBA, so it's guaranteed. And this loan has a maturity of 2 years at an interest rate of 1%, which isn't that bad, right? But we're going to talk about how to get the loan completely forgiven and the steps you need to take to do that. But for some people that won't qualify to get the loan forgiven, 2 years at 1% is not bad. I mean, I can't think of
that's
a
amazing
1% loan.
Unheard of.
So, okay, you might be wondering, well, how much can I borrow? Well, let's go over the calculations. How do you calculate the max amount that you can borrow? Well, it's an aggregate of the payroll costs from the last 12 months for employees whose principal balance whose principal place of residence was the United States. Aggregate is just a fancy word to say just add it all up. Add every single month of your payroll up and get a total there, okay? Now, step 2, subtract any compensation paid to an employee in excess of an annual salary of $100,000. So let's say you pay yourself or you have a manager on staff and they make $150,000. Well, you can include 100,000 of that, but you can include the 50. So, I mean, at least you're still getting something.
Wow, that's cool.
So this is $100,000 or any amounts paid to independent contractors or sole proprietors in excess of $100,000. So if you're a sole proprietor and your only employee is you, right, and you pay yourself, and let's say you've been doing well and you have $150,000, well, you can put down $100,000 for in your calculations. So then step 3, you need to calculate the average monthly payroll. How do you do that? You divide the amount that you added up in steps 1 and 2, and you divide it by 12. Pretty simple. Then step 4, multiply your average there by 2.5. And then step 5 is add the outstanding amount of the economic injury disaster loan. So remember, if you already applied for the EIDL, because that was something that was offered like a month ago, and some people are waiting in line, you might qualify for a certain amount of that. Well, they're going to take that amount plus the amount that you're in the PPP, and the lesser of the two, they're going to combine it into one loan. Okay. So, payroll cost. How do you calculate that payroll cost? What is included in that amount? Well, I have it listed here on the screen straight from the guidelines from the SBA. It includes salary, wage, commissions, similar compensation. We're talking about tips, anything that you paid for any vacation leave, parental sick leave, things like that. If you actually let somebody go and you had a severance package, that counts. Any type of employer contributions for healthcare benefits, insurance premiums, any retirement benefits that you were paying out or contributions to 401ks, as well as any payments that were made by the business in behalf of for the state local tax assessed. The sum of these payments cannot be more than $100,000 in 1 year. All right, so let's look at an example, okay? Just make the numbers easy. If in example 1, no employees make more than $100,000, let's say the annual payroll you added up, you went through, look, all of the requirements that we had here on the previous screen, you add it all up for the last 12 months and it's $120,000. All we have to do now is divide by 12. 120,000 divided by 12 will give us an average monthly payroll of $10,000. Now we just multiply that by our 2.5 multiplier, and that means that the maximum amount of the loan that we can apply for would be $25,000. You get it?
Perfect.
Awesome. So let's talk real quick about that EIDL. There's other, I mean, let's talk, here's the update. Right now, they are not underwriting the EIDL. So if you've already applied and you're waiting, well, good luck, keep waiting. You need to put in your application if you haven't already for the PPP, because that's all that they're funding right now. All of the other SBA programs have been put on hold because there is such a huge demand for the Paycheck Protection Program. So that they're going to come back to that, but they're basically putting that on the back burner to June 30th, and then they'll come back around and then reprocess all of those loans. But for anybody who didn't know, you keep saying EIDL, that's the Economic Injury Disaster Loans. This is where not the last stimulus bill that was passed, but the one before it, they released $50 billion into the SBA for the EIDL. These are loans that where you can get up to $2 million and at a rate of 3.75% if you were a for-profit company, or 2.75% if you were a nonprofit. And these were loans for up to 30 years. $10,000 grants were also able to be obtained. Now, I'm not quite sure what the underwriting guidelines were. They weren't very specific on that. So you definitely will have to consult with an SBA representative to figure that out. But this was specifically designed for if your business suffered severe revenue loss due to the coronavirus or the government shutdown, or your expenses increased out of control due to the coronavirus cost.
Absolutely.
So either way, if you had a severe loss of revenue, or your expenses severely increased due to the coronavirus, then you were qualified for this loan. Now, the EIDL is different than the PPP in that you still have the standard SBA requirements. You still need to have business credit. You still need to have a credit score, minimum credit score of like a 640. But we all know they say 640, but they're really looking for over 700. And I mean, you just got to meet certain requirements to qualify. And those requirements on the PPP have been totally relaxed, but on the EIDL they haven't. So that's something else to keep in mind if you're trying to figure out if you're going to qualify. The SBA's got all kinds of guidelines, and we're trying to give you the most up-to-date information. But Ray, how often is this information changing?
Literally by the minute. I mean, there's all these updates that come out all the time. Underwriting guidelines change. They literally just changed some of the underwriting guidelines to start to pull it back, try to not have it available to so many people so quickly.
It's crazy, and this uncertainty. I have to tell you that you kind of saw this coming, because we talked about last week about the possibility of them opening it up to secondary lenders, but they didn't. And they put it all on the banks. And then we see the banks were just completely overwhelmed by this. And so that's why we're seeing what we're seeing here. So let's talk about loan forgiveness, because this is really what people want to know. If I'm going to borrow the money, how do I get the money and not have to pay it back, right?
That's the key right there.
Okay, so forgiveness, the loan will be fully forgiven if the funds are used for payroll costs, interest on mortgages, rent, and utilities within 8 weeks after the loan is issued. Okay. Now, one of the things we mentioned in a previous video was that existing interest on loans that you currently had in place was a potential. They actually, the SBA did, they removed that. That is not something. So if you have like an auto loan, or you had some other loan out there, that doesn't count. The only thing that can be deducted is interest on mortgages that you're currently into for your business. Okay. So now here's how do you have to spend the money? Because you're going to have to prove this. At least 75% of the forgiven amount must be used for payroll. 75%. So you can't think like, well, I'm going to put 75% into paying my operating costs. That's not going to work that way. 25% of it put into your operating cost will be forgiven. But see, it's the Paycheck Protection Program. It's designed for employees to keep their jobs, or to, if they were let off, to be rehired, or if their pay was decreased, to have their original pay rates reinstated. That's the goal here. So if you're trying to play ball and get along and work with the government in this is what they want you to do. And if you do what they want you to do, then you can get this forgiven. So if you put 75% of the money that you borrow back into your payroll for your employees, then you can get that forgiven. Now, we're talking about if you reduce somebody from full-time to part-time, you've got to put them back to full-time. If you've decreased their wages by any amount, you've got to re-increase that. And this is when you submit the loan forgiveness application, it has to be done within 8 weeks after the money was issued. And then they're going to take 2 months. Some designated SBA person is going to take 2 months to review your documentation. So let's talk about more about the loan forgiveness. Okay, so oops, didn't want that. Okay, so you will owe money if you do not maintain your staff or your payroll. I mean, that's the bottom line, because that's what this is for. The number of staff, if you, so they're doing this kind of on a sliding scale. It's not like an all or none. It will all be forgiven or it won't, because you can have a portion of it forgiven. But let's say you've reduced your staff by 50%.
Yeah,
Well, then you can get 50% of this loan forgiven, right? But so it's going to be based off of whatever your full head count was, or the number of hours that was offered, or the money that was being paid. For example, if you decreased your salaries by 25%, then what they're talking about is then the SBA is going to look at that and then perhaps reduce the amount that they can forgive you by 25%. I mean, they haven't actually put out the exact guidelines of what their criteria they're looking for and what the reductions, but it is in there that it is a sliding scale, so that their portion can be forgiven, but it might not be. But what we want to do is help you understand how to get it completely forgiven. So what you have to do is, if you have employees or contractors that you've let go or you've stopped paying, and you're going to claim them as part of the PPP, then you need to bring them back to their full-time status. You need to, if you laid them off, you need to rehire them. If you reduce their wages, you need to bring those wages back up. If you reduce their hours, you've got to bring their hours back up. Whatever it is, you got to go back to where you were before this all happened. And if you do that before June 30th of 2020, and you have documentation to prove it, then you can get the whole thing forgiven.
Nice.
All right. So loan proceeds can be used for payroll costs, including the benefits for the employees, interest on mortgage obligations incurred before February 15th. So if you're already in a mortgage for your building, or you have machinery that you're leasing, or something like that, rent, lease agreements that were enforced before February 15th of 2020, utilities which began service before February 15th, that's what you can apply 25% of what you borrow.
Only
So,
20.
so if you borrowed $10,000, you can put $2,500 towards those specific operating costs. The remaining $7,500 has to go to employees.
Sure.
Loan forgiveness. For forgiveness, you'll submit a request to a loan servicer. The request will include documents that verify the number of full-time employees and pay rates, as well as the payments on eligible mortgages, lease, and utilities. So listen, there's a lot of paperwork that you got to get together. Don't think that this is just a click an online application, you're done. You need to make sure that you're working with your, if you have a bookkeeper or a CPA, that you're getting all of these documents together now, because if you wait till after you get the money and then you've got 8 weeks to scramble to get this together,
It's gonna be rough.
yeah, so get it together now. But once you turn in all of the documents that have been requested, they'll be reviewed within 60 days and you'll get back your answer. Right? So if you think about it, another thing is when you borrow money in the PPP, it automatically comes with a 6-month payment deferral. So that's good. But if you want to make sure that you never pay anything at all, you've got 2 months to get all that information into the loan servicer, so that even after, when the 6 months comes, if it's all forgiven, then you don't pay anything. It just basically turns into a grant.
That's great advice. So make sure you got it on point.
Now let's talk about applying, and we got to talk to you about this, because listen, if you haven't applied yet, you might be too late. It's time to act now. Okay, because the SBA put all these guidelines out April 3rd. So I mean, that was last week. And so small businesses, sole proprietorships can apply, and that starts, the sole proprietorships and the contractors are tomorrow when they can apply. But let's talk about this. They talk about that you have to apply by June 30th, but we've been noticing that there is a lot of money that's been going on. In fact, I might have a slide on it. Yeah. So if you look at just the news feed from this week, Wells Fargo stopped taking applications for the Paycheck Protection Program. This was just one day after taking applications. They'd already reached their limit. Bank of America, on the bottom of your screen there, they did $6 billion in just 2 hours.
Yeah,
Right.
they finished the day at 33 billion.
Yes.
That's insane.
And so you're starting to see people are frustrated with the program and all the documents required, because I mean there's a when you submit the application, it's like just a 2-page form. It's really simple. But then the document request that comes, there's a minimum of 15 documents that they're going to need on your for the last months, all your payroll. They need your P&L statements. They're going to want all of the driver's licenses for all of your employees. I mean, all of this documentation and more, of course. So a lot of people were hoping that would just be free money. But everything, I mean, look, these are the hoops you have to jump through. So jump through them, because the government wants to make sure that this money is not going to be abused, because some businesses or business owners might just take this money and not give it to employees and reinvest it back in their company. And the goal of this whole program was to try to make sure that people who have jobs could still have money and still afford to
Absolutely.
pay their bills and live and eat. So it's urgent that you act now. Oh, so right there, 32.6 billion in loans, right, in the first day.
Around it.
But listen, there's only $349 billion allocated to this. And here's what's happening. We're seeing that on average, about 10 to 20% is being loaned out every day. And so this started Monday. Today's Thursday. And so we're looking at somewhere by Wednesday to definitely by Friday of next week, it's all going to be gone. So you don't have until June 30th. You really need to act now.
Now the government says they're going to fund some more, but I mean, can we really?
Well, the government says they're going to fund more, but how does that work? The House of Representatives has to agree with the Senate, and then the president has to sign the bill.
And that moves really quickly.
No, it doesn't. So don't hold your breath.
But that's a lot. 349 billion. I don't like that.
Absolutely.
Whew.
Now let's talk about Jennifer Kelly, an SBA spokeswoman, said that as of 9:30 a.m. Monday, the program had guaranteed $38 billion, nearly 130,000 applicants at over 2,400 lenders. Last Friday, Wells Fargo stopped accepting applications, but I mean, I don't like to rag on them, but Wells Fargo had to stop accepting applications because remember they got in trouble a while back for all those fake accounts that they opened.
Yeah.
Well, what that did is that the FDIC lowered the cap on them. But I heard that the cap has been raised for emergency purposes.
Came back last night, I believe.
So Wells Fargo, so you can go back and apply now to Wells Fargo. But imagine they dropped their cap down and by like $10 million or $10 billion, and they blew out that cap in one day. One day of accepting applications, Wells Fargo had already reached their cap. So why are we sharing this with you? It's because, look, it's urgent that you act now. I mean, if you're at all thinking about this, I mean, you got to get all this paperwork together. You need to be acting now. You need to take advantage of the opportunity to get access to this money, because they say they're going to release more money, but it's your guess, and your guess is as good as mine as to if that or when that's going to happen. So the current economic uncertainty makes the loan necessary. So you have to make certain acknowledgments. You need to be able to state how the current situation is adversely affecting your company, and how you were going to use these funds to retain workers, to maintain payroll, to make your mortgage, your rent, or your utility payments. Now, there's some people who had this brilliant idea that I own more than one business, and more than one business is affected,
Right.
so I can make multiple requests. Anyone know something? The craziness and the chaos that's going on, especially if you're applying to 3 different banks, you probably would get approved for all 3. But on the back end, they're only going to forgive one loan. One loan per person. You can be an individual with 6 businesses and you apply for all 6 businesses, But you as an individual will only have one of those loans forgiven and will have to pay back.
You bring up a very good point, because that'll be interesting to see how this all plays out when the dust settles, because there's so much chaos accepting of loan applications before they even have all the terms and underwriting in place. And so, are you grandfathered in?
Well, I think there's also worries that there's investor groups that have businesses that are applying for money that are just going to take the money and then lend it back out.
Hmm.
So they're going to accept free money, but then lend it out at interest. And so there's some thoughts that that's not right. So but because Congress acted so fast and they don't have a safeguard against that, I think that that's possible, that there could be a lot of investor groups that go out and apply for money to then turn around and lend it out at interest.
Yeah, so we won't know. It'll be interesting to see just some of the ramifications of this, but for the most part, this is opening it up to a lot of businesses. There's money out there. Got to go get it.
Absolutely. So what type of documentation is required? Well, we put it together for you. You must submit all this documentation, everything that establishes the eligibility for your payroll processor records, payroll tax filing, if you pay contractors, the 1099 miscellaneous form, and all of the income and expenses, talking about the P&L statements for your, even from a sole proprietorship. For borrowers that do not have such documentation, the borrower must provide other supporting documentation, such as your bank records, sufficient to demonstrate that you are qualifying for the payroll amount. The application must submit an SBA 2483 Paycheck Protection Program application and the payroll documentation as described above. So you still have to fill out that. It's like a 2-page form. It's not that difficult. The lender must submit the SBA Form 2484, the Paycheck the Paycheck Protection Program lender's application for a 7A loan guarantee electronically in accordance with the program requirements, and maintain the form and supporting documentation in its files. Starting to pile up. All right, all loans will be processed by all lenders under delegated authority, and lenders will be permitted to rely on certifications of the borrower in order to determine eligibility of the borrower and use of the loan proceeds. So
you can't go online just like you were with the EIDL before. You have to actually work with a lender.
Stated income isn't going to get you through this one. You got to document everything. All right, so we have a little cheat sheet here. The Paycheck Protection application. Well, we had this linked. I don't have that link right now.
Yeah, we'll get it uploaded into the comments.
Right.
Or not the comment section, the description.
Okay.
After this live is complete.
All right. So, and then the form, the 940 and the 941, the annual payroll statements. These are from the IRS website. Right? You got to have these forms. These are the forms that the SBA wants. The 2019 payroll report, monthly payroll, which shows the number of employees and their wages. You need driver's license for each of your employees and a voided check for which bank account you want the money deposited into. The number one thing is we need to know the number of employees as of January 15th, 2020.
Or February.
What did I say?
January.
Yeah, January, February.
This whole working from home thing, it's like, I don't know what day it is anymore.
2019 total employer payroll cost, and have you already filed for the SBA EIDL? Because remember, if you have, then whatever you get approved for there will be rolled into this loan, and we'll get the lesser of the two. All right, so we talked about how to qualify and how to be eligible and how to get it forgiven, but who doesn't qualify for this? Well, if your business is engaged in any illegal activity, you're not eligible. But again, let's talk about if you're engaged in any activity that is illegal federally by federal law. Now, there are certain businesses that operate, and there could be state law that makes it legal. But if it's illegal on the federal law, the SBA won't back the loan. So what businesses might that be, Ray?
Well, for example, dispensaries of medical cannabis, but I don't think they're hurting right now. Instead of going out there and starting a business, I saw a whole bunch of people, stacked up and lined up. Booth sales went through the roof. I mean, some folks are treating it like a party.
Is it like Uber Eats? You can just get it through.
No, not to knock if now if you have a medical concern and that's helping you out, that's one thing. But as far as a recreational use, take this time to be starting a business. I know the folks that are sitting at home and they're with their kids, and yeah, let's have the kids start a business.
Yes,
that's a new trend we should start.
But you bring up a point here. If you're a household employer where your employees are nannies, housekeepers, it could be a maid, your gardener, things like that, those actually don't qualify. And I don't understand why. Because everybody, to me, okay, here's my thought. What's an essential job? An essential job is anything that puts food on the table, pays for your rent, and allows you to live. So if you have a job and you made money and it allowed you to eat and live, that's an essential job. That's just the way I look at it. But so, okay, listen, if anybody is an owner in your company, they have 20% ownership or more, and they're under criminal indictment, or they have already been convicted of a felony, or and this can be anything within the last 5 years, you're not eligible, right? And then lastly, if you have defaulted on any previous SBA loan within the past 7 years, you're not eligible, okay? Now, again, we can't state it enough. It's urgent that you act now, because the PPP, the Paycheck Protection Program, it's first come, first served. And we've already reached about halfway through all the money that's there, right? And it's going to, you don't have basically until June 30th. That's the bottom line, right? If
you can keep applying, but I mean, what is the chances
you're going to be on back order?
You're going to have to be on the 5th, 6th string of the stimulus, the next. They're going to have to enroll 6 more stimulus plans.
I know. So, and who knows if that's actually going to happen. But what we want you to do is that if you're even on the fence thinking about this, you need to contact us right away. I mean, we'll talk about that in just a bit. Okay, yeah, so this is where I want to talk. So where do you apply? You can apply through any existing SBA 7A lender. That's pretty much any bank, right? Many are having issues processing applications, though, because they're overwhelmed. Now, we do referrals through our broker. We do have an SBA broker, and they do charge $2,000 application fee. Now, they talked about how the fees are waived, and the normal SBA fees are waived, but the SBA does allow brokers still to charge up to $2,000 fee. Now, here's what I recommend. If you have a bank or you're working with somebody, of course, that's going to be free. There's no fees. Go ahead. You're going to have to jump through the bank's hoops, and then you have to jump through the SBA hoops. But if you can do that, then do it, because that's good. But if you want to get some, I mean, if you're willing to pay the $2,000, that'll come out of the PPP, right? If you're willing to pay this money and work with our broker is going to take care of everything. What would our broker actually do? Our broker is going to make sure that if you qualify for the EIDL, they're going to make sure that that gets tacked in there. If you qualify for the grant, the grant stuff, it's pretty loose out there. But when you have an SBA dedicated specialist, they're going to apply for the grant money for you as well. So you go to the bank, they're only going to give you the PPP. They might not even give you the grant money that's out there, because that's a separate pot. And then, as well as if you qualify for any 7A SBA loan or 504, they're going to find that money for you too. When you work with our broker, our SBA broker, anything that fits within that category, they're going to just do all that for you. And when I say do it for you, is they're going to line up all the paperwork. You still will have to fill it out, but they're going to come up with a whole checklist. They're going to help you organize it. They're going to put the whole packet together, submit it, push it through it, get it in the front of the line. See, when you work with a broker, they can sidestep the bank. See, the bank is actually kind of like a bureaucracy that's a middleman step to get to the SBA. But when you work with a broker, you skip all of that. You don't have to jump through all those extra hoops. But there is a cost involved. So if you want to just expedite this and have somebody cut through all the red tape and help you and work with you and help you and hold you accountable and call you every day and make sure you're getting the information and then checking the information to make sure that it's correct. Because a lot of people are submitting information and then they're having to resubmit and it's slowing things down because they didn't understand. But when you have a broker that's putting it all together for you, he's going to make sure that he puts the strongest application forward to get you the maximum amount of money that you.
Well, it sounds like in the other situation, there's a potential of missing out.
Well, yeah, because if you submitted your application and then it comes back and you've got to redo that, somebody else now goes in front of the line, right? Somebody else got in front of you. So that's something that we want you to think about, because if you're like, look, you've been through the bank, you've jumped through those hoops and you're not getting anywhere, we can set the bank aside, go through our broker, and let's just get this.
So you're saying, for example, if I was at like an amusement park, I could either wait in line with everybody else or pay that little amount to
get the speed pass.
Yeah, to get the fast pass. And so that's the way I kind of look at it. It all comes down to many times spending the little extra here. For example, building business credit. To spend that little extra to gain access to those funds, that's the game changer.
Well, and to me, here's the thing that I agree with you completely. But the fact that our SBA broker is going to make sure that to get you the grant money as well, the grant money is going to pay for it. Right, so.
And that's the other thing too. We don't want to make it sound like everybody else is working for free, because brokers out there still need to pay their bills. And so the thing is, we're just going to be honest about it exactly up front of what we're going to be charging.
And it's not like this is like we're not getting paid anything. This is just we want to make sure our broker gets paid. I mean, he does good work. All right, so other SBA programs. We're talking about Express Bridge Loan Pilot Program for businesses. So the SBA still has programs out. The EIDL we talked about, the 503, the 7A, that stuff. So there is access to bridge loans and gap funding for businesses. But again, a lot of things are being put on hold, and you have to know how to apply for them in the right way and at the right time, because the whole system is really overloaded right now. And then, okay, we have other financing options that are open.
Well, so that's what we were talking about the other day is everybody is in line for the PPP. And so let's go back to the amusement park thing, because that seems what this is. It's literally a roller coaster that we're on daily.
Yeah.
And so if everybody's going for the big guy and there's this big show that's happening, well, what about all the other little rides that nobody's in line for? That's when you can choose, hey, if you can put your buddy there and wait in line, but then, let's say you put grandma in the line here for the big show, and then you run around and do all the other little rides while everybody else is waiting. This is exactly what we're talking about. So
Space Mountain is where everything's happening. I could then run over to Splash Mountain.
Right. And so that's what it is it's accessing these credit line hybrids. So when you start working with our team, it's not that we are just looking for a PPP. We're going to go through 27 different ways of finding you capital right now. There's not just these 2 EIDL, there's not just the PPP, there's 8 different programs that are going out right now. There's state programs that are going right now. And so wherever the attention is, it's kind of like a magic trick, sleight of hand, like all the attention is over here, but the people that are able to do the other things here are the ones that are actually going to be making some really big gains. So we have lines of credit up to $150,000, no document fees.
That's huge. When we just talked about all the documents with SBA.
0% for up to 18 months right there. Yeah, the 1% on the EIDL or the low interest rates, those are 2-year terms. So what about getting a line of credit for 18 months at 0% that you could continue to use into the future for your business? Helps you build the business credit and just a decent credit score now. So before your utilization goes up, before your personal credit gets impacted, leverage it now. Because the wave is coming. You see it.
That's a good point, because there's a lot of people are like, I'm going to wait, I'm going to ride this out. And then they slowly keep putting more on the credit card, put more on the credit card. And then if you wait 2 or 3, 4 months from now, and you're like, oh man, I really need it. It's too late.
But give it to me, give it to me, give it to me. You're like, no, desperate. But what about when businesses are like, I could use it, you know?
Right, because I mean, really, businesses right now have really only lost about 1 month of
Right.
finances. And so when they go back and they look over the last 6 to 12 months, I mean, it's easy to just explain off this past month.
Mhm.
And so this is the right time to strike. I love the hybrid, because the hybrid, why is it called hybrid?
Well, so the hybrid, that's what we love about it, is because you have the cash out ability, you have the cash advance ability. It works similar to, say, a home equity line of credit, a personal line of credit, a business line of credit, but it's in a credit card form. So there's all these benefits of being able to have this cash aspect to those lines.
So you get the credit card benefit of a 0% interest rate, introductory rate to start. And then you also get like a check where you can pull the
Mhm.
money out. But if it was a regular line of credit, you'd be pulling it out at 9, 12%.
Yeah, it could be a balance transfer fee, it could be cash advance fees, percentages.
But we could literally write a check
Mhm.
for our balance at 0%.
Absolutely.
Love the hybrids.
Now, so other financing options, we got cash flow financing, so loans up to $500,000 that literally could be funding that within 48 hours. No collateral or credit requirements. Now, you do need at least $5,000 of monthly revenue and 1 year in business to really even start the process there.
You know who this is good for? I think of all those restaurants or drive-throughs where you still
Mm,
have cash flow. It's reduced itself a bit, but I mean, look, I mean, if you're like just trying to figure out how you're going to make it, this is an excellent option because I mean, the funding, 2 days, right, and you get the funding.
absolutely. What about asset-based financing? So we have lines of credit. Well, not me, but not us personally,
Our
but we
broker,
are, yeah, we connect you with, the lines of credit, the loans that are available out there, 5% rates, no credit or cash flow requirements. So any assets you have right now, remember, there's some assets that may lose value in the next few months. Things are going to change. We don't know where those are going. So right now, our economy's been raging Cajun for a while, and values are huge. So take advantage of that situation as values are at the top dollar right now.
can I say something to that? So the stock market, it's kind of going, I mean, it's down, right? I mean, and it's we're trying to get it to come back up. And there's this big want or push to, well, I should sell and try and get as much money as I can. But what people don't realize with the asset base, if you've got these stocks, even though they're at a low amount, leverage that low amount.
Mhm.
Don't sell them. Keep them. With this asset based lending, you get to keep your asset and leverage it. So imagine that the stock will come back, but instead of selling it off, you leverage what the current value is at what is it, like 70 to 90 cents on the dollar? But you could, I mean, that could be huge. That could pay the bills for the next few months.
Bring up a good point because many folks don't realize that they can leverage their stocks, their bonds, and you only realize the losses when you sell.
Right.
So if you hold on to it and leverage it, and then over time it rebounds and it repairs, then did you actually lose?
Right. So people see that maybe their stock has dropped 50%, 70% or something, and they're like, oh, I better sell. And then they suddenly get this small amount of money. Imagine holding on to the stock, leveraging and just getting that, borrowing that small amount as if you had sold it, and then use that and then still retain the stock. And when it bounces back, you still own it.
And when we're talking about stocks, this is individual stocks, this is index funds. We're not necessarily talking about mutual funds. I'm not going to get into stocks today, but mutual funds are actually businesses that you're investing into, financial firms. So financial firms, those are different. Those actually can lose money.
But 401ks, people are
401ks,
seeing the values drop in
yep,
that, and they're really worried. But you can leverage that
leverage it now.
without taking a dispersal. So
Absolutely.
you don't have to be penalized.
Absolutely. So yeah, before you start pulling out the funds, leverage. In business credit, you just can't go wrong with business credit because high limit revolving accounts, fast approvals, helps you qualify for funding. Really, we had an interview earlier with a gentleman named Stephen Weibel, who in the last recession, because he had business credit built, was able to amass this huge real estate portfolio because he was prepared. He saw that, hey, it's starting right now. This is, it's starting. Where's it going to be in a year and a half? Where's it going to be in 2 years? If we start preparing now, dig the well before you're thirsty. It really goes back to that whole thing.
Right.
And what about no personal guarantee checks, no credit checks, no collateral requirements, no cash flow requirements?
Well, I mean, yeah, I mean, people who utilize our system of building business credit see results in as little as 30 days. Imagine being able to gain access to toilet paper through one of our vendor
If you're going to
accounts.
buy it anyway, might as well buy it and build your business credit while doing it.
Exactly. But I mean, we've had people within 30 days already boost their available credit by $10,000 in some cases. We've had people achieve huge results in as little as 4 months. I mean, it really is going to depend on how hard you work it, but not having to use a personal guarantee.
Mm-hmm.
You don't have to leverage your phone. You don't have to leverage your social security.
Well, you bring that up though. We were talking about that earlier too. You do have to leverage your phone number because many folks are still using their cell phones as their business numbers, and they don't realize that that can create a denial. You get flagged as an unestablished entity.
And it's tax season. Why isn't everybody starting a business so they can write everything off and keep more of what you make?
Let's make this happen.
Well, we've reached the end of our time.
Good.
This was good. I'm grateful to have been with you. We hope you learned something. Listen, the message we want to get out to you is if you have a business, you need to strike right now and go get money through the payment protection program, the paycheck protection program before it's gone. If you haven't started a business, now is the time to start. You are literally throwing money away and your opportunity to gain access to money and build wealth on opportunities that are just around the corner if you don't start now. And so what is it that you need to do? Take action. If you don't know what to do, you need to give us a call. Let us put you in touch with our broker to help you funnel you through the Paycheck Protection Program. If you're like, I need to start a business, let us do a 30-minute consultation with you and show you, just talk to you and see where you're at and how we can help you learn how to start a business that is fundable and lendable, and within 6 to 12 months can have access to $50,000 or more in lines of credit. Within a year, have access to another $150,000 in lines of credit. These are the things that we want to help you do because we're the wise guys in ties, and we see it as our mission to help give you the tools that you need to thrive and succeed. We want to help you achieve whatever God put you on this earth to do. So on behalf of myself and my business partner, Ray Fleming, we'd like to say good night and God bless.